Hey everyone, welcome back to the channel. If you've ever wondered how big companies get the money to grow, or how governments fund huge projects, or even where your investment goes when you buy a stock, this video is for you. What are capital markets? Capital markets are where long-term financial instruments like stocks and bonds are bought and sold. They connect investors, people with money, to companies and governments that need it for growth, projects, or expansion. What do capital markets do? Capital markets help raise capital, companies sell stocks, governments issue bonds to fund projects, provide liquidity, you can buy or sell investments quickly. Price discovery markets determine the value of securities through supply and demand. Risk transfer, investors spread money across different assets to manage risk. Efficient allocation of resources, capital flows to the most efficient businesses. There are two structures of capital market. The first one is primary market. This is where securities are created. Think IPOs or bond issuance. And second is secondary market. This is where those securities are traded. Think stock exchanges like the NYSE or OTC markets. There are key processes of primary market. First is initial public offering or IPO. Imagine a company selling stock to the public for the first time. That's what we called an initial public offering. We will go back later for the key features of secondary market. Now we will proceed to the second process of primary market, which is the bond issuance. It is where companies or governments borrow money from investors. And last is private placements. It is where securities are sold directly to select investors. Now we will go back to the key features of secondary market. First is stock exchanges. These are organized platforms where stocks are officially listed and traded. Think of it like a formal marketplace with rules like the New York Stock Exchange. Second feature of secondary market is OTC markets. These are decentralized markets where trading happens directly between buyers and sellers, usually through brokers or dealers, more flexible, but less regulated. Now let's proceed to key instruments in capital market. Capital markets are where people or companies who have extra money lend it to those who need money to grow, like businesses or governments. There are three common types of instruments. First is equity securities or stocks. Stocks mean owning part of a company. And there are two types of stocks: the common stocks and preferred stocks. Common stocks give voting rights and dividends. Preferred stocks offer fixed dividends but no voting rights. Second is debt securities, bonds. Bonds are loans. You lend money to companies or the government, and they pay you back with extra money interest. And the last one is hybrid instruments. Hybrid instruments are a mix. They act like loans but can also turn into company ownership, like stocks. Now let us proceed to the importance of capital market in the economy. Capital markets help raise money, buy and sell investments, and keep the economy growing, like a big busy marketplace. Economic growth and development. Capital markets help the economy grow by using people's savings to fund businesses, create jobs, and support new ideas. Wealth creation. Building money over time by investing in different financial tools. Corporate governance. Public companies must be honest and responsible because investors and the government watch them closely. Financial stability. Capital markets keep the financial system safe by helping people manage risks and spread their investments. That's all. I hope you learned something. Thank you.